pull up, you know, a Priceline or an Amazon or whatever. We're going to pull up Amazon in a second. You're going to see options that are worth $3, $4, sometimes even $10 that go down to nothing. Okay? Now, what are some concerns here? This is not as easy as a game as it is as you might think. I mean, you guys are sitting there probably saying, well, shoot, I mean, I could just write this stuff and then just let it evaporate. Well, there's a problem with that too. I mean, what if you're going to write a 13 call down here? What happens if you write a 14 call right here? You know, you're still betting on the direction of the stock at some point, right? You're still kind of betting on it one way or the other, all right? So now let's take a look at another example here. Let's take a look at this Amazon. So you see recently, actually, let's just look at the last 10 days. So you see recently she's kind of topped out here. She's kind of having issues here at $300. And this lends itself to the argument that we're going to make today about finding some credit spread rights or some time decay rights for this week as well as the next week, just so you guys can start figuring out, okay, how is it possible for me to start writing credit spreads or taking advantage of this particular strategy. So let's take a look at this 310 call right here, okay? So we're going to look at this 310 call. Remember, this one expires this week, okay, at the end of this week, and we're going to take a look at it for the past week or so, all right? So let's take a look for the last month or so, okay? Remember, this option has been open for a while, okay? So here we go. So we'll go down here so we can get this thing true. Okay, so this is a 310 call. Now, where is it priced in the highest? Notice, past couple of days, okay, beginning of last week, all right, stock got up to $300, and notice it's been pushing up $300 sort of every single day, 6th, the 9th, the 10th, and the 11th, okay? But notice how slowly the value of these options just dwindled down to absolutely nothing. And if you take a look at the day's action, I think this thing got down to a quarter. Yeah, so this thing's down to a quarter right now, okay? So here's the discussion. We got to have a discussion here real quick on writing options, why you should do it, how the smart money does it, and then try to come up with strategies for you guys to take advantage of this if you want to in the future. All right? So, number one, where is this? What is going on with the smart money here? Smart money is selling us these options all day long, okay? And you can see it on this retail chart, okay? What's happening here? What's the dynamic that is happening every single day? And you'll see this on the Priceline. You'll see this on the Google. You'll see this on all of these options, all right? Especially the Netflix. We'll take a look at the Netflix next. Okay, so notice what's happening on the stock from the 6th, all right? So this right here, I don't know if this is the 6th. This might be the 6th. This might be the 9th. 9th, 10th, 11th, 12th, 13th. Yeah, okay. So this might be around there. So look at the spike up off the open, okay? And this is always because the stock looks bullish over $300 every single morning, right? So stock looks bullish every single morning. Let's actually take a look at this. This is Wednesday is the 11th. The day before that is the 10th, okay. So this right here is the 10th. So this is what we're looking at right here. So stock is over $300. They're willing to pay more for it, okay? Now, look at the washout when the stock dumps back down to whatever it is, 296, okay? That's a pretty decent washout. Now, look at the next day. Again, spike up to 150 and then all the way back even lower. Spike up all the way back even lower, all right? So this is how they move weekly options or options that are close to expiration. There's always shakeouts, right? There's always shakeouts, and this gets people very scared. We're going to talk about liquidity dynamics as well on your options when you're taking a look at them. All right, and I'm going to try to focus in on an actual level too, and try to give you some real-time examples, or at least just generally, so that you guys can get the idea of what you're going to have to deal with. Okay. But, I mean, you can see here there's plenty of opportunity here. So if you understand that a stock has rallied significantly, okay, and can't push up any higher, then this lends itself to the idea that, okay, you can write against it. You can write out-of-the-money calls against it to play the fact that your tape is telling you this shit ain't going anywhere, Okay, and we're going to go to the tape for confirmation as well. Okay, now I want to show you options that are even further out of the money. Okay, so let's go to this 320 call. All right, so let's take a look at this 320 call. Let's see what this thing looks like. All right, now this is even further out of the money. How much premium could you have gotten for the last 5 days? Notice you still get 50 cents. And now you're looking at an option that is 320, which is past all-time highs. Okay, so you want to play even safer. Okay, obviously you're making a little bit less money here, but you want to play even safer. You go all the way out to 320. Maybe you go all the way out to 315. And look at all the premium that you can still get here. 40 cents, 30 cents of premium. This is a strategy, guys, that will make you money slowly over a long a period of time. Okay? Now, again, this is the smart money way of doing things. All right? This is the slow and steady sort of race here. The tortoise and the hare, me being the hare, and everybody else who predominantly does this strategy being the turtle. Okay, so at the end of the day, this is a valid strategy. This is a very powerful strategy because it can generate significant profits over a long period of time. Okay, so I'm talking about a year, a couple of years. And that's really where I'm focused on. Now, before we get into analysis here, okay, I want to talk real briefly about writing options in general. So number one, I have a question. How many of you guys write options right now? How many of you guys tried writing credit spreads or being on the short side of an option? Has anybody here tried it? Say yes. And if you haven't, say no. Okay. Okay, so we got a bunch of yeses, we got a bunch of nos. Okay, so for the people who haven't done it yet, there are some things that you got to make sure before you go into the game. Okay, so number one, there are a lot of margin requirements. There are a lot of shitty margin requirements that you have to go through in order to even be able to do this. Okay, so this is one of the major issues why most retail traders don't do it, because they don't have the account size. So if you got $5,000, the first thing that you need to do, okay? So let's say you're trading with Fidelity, or let's say you're trading with Options House, is you need to get on their customer support or their technical support or their active trader desk, whatever the hell it is, whoever it is you talk to. You need to ask for approval, okay? So there's different levels of approval, all right? And let's see if I can get Fidelity's here.